machine that I use to do the broadcasting from, so I've had to downgrade to a slower machine. Hopefully I won't have too many problems. Most of my other machines I think are too high resolution, although we did a live one using one of them. Recently it was okay. It is 2:45 p.m. on January 19th, and let's go ahead and let me open up my PowerPoint and get started. Doing this now so I can watch some football the rest of the night, as I'm sure many of you are feeling the same way. So I've entitled today's PowerPoint as Closing In on the Top with a question mark. I mean, obviously this rally continues to get longer and longer in the tooth, and at some point that proverbial top is going to hit us, and as we've learned in the past, markets fall a lot faster than they go up, and there was a lot of ugliness last week, although as you'll see, I didn't have a bad week at all. Disclaimers for education purposes only. Anything I recommend is for education, not investment advice. I'm a doctor, not a broker, and I am independent, and I'm not affiliated with any software vendor, and I've paid for everything that I use, at least at some point. Update on my meeting. We are near capacity. So here's probably the most important part of the talk. If you have sent your money in and you have not received an email confirmation from me with a survey attached or any confirmation from me, then I need to know very quickly. I probably will open up 3 more spots and take us to 25 people. But I've got 22 or 23 already committed. So $850 for a couple, $750 if you want my trade station indicators, $500 if you don't want indicators. All meals are included, and that includes dinner at the Capitol Grill on Friday night. Just so everybody knows, my meeting is not by any means a replacement for the PV meeting. George Lee and I have an independent approach. I'm clearly biased and a strong favorite of HGSI and Ron and Ian, but ours is different. And I think that if you're thinking about one or the other, well, it's probably almost too late to come to mind, but I strongly, strongly, strongly urge you to go to the PV meeting, even if you're coming to New York City. You'll find the content is different, and the opportunities are there for both programs. That meeting is March 29th, 30th, and 31st. Mine's February 14th, 15th, and 16th. And their meeting, I believe, is $12.75. But everything else is cheaper food and hotel in Palos Verdes than it is in New York City. I'm not going to spend a whole lot of time here, but to me it's all about learning from others. I'm reading a new book from Miniverdi, one of the great traders of the modern era. But I rely upon others to teach me, whether it's Ian and Ron, whether it's Alexander Elder, whether it's O'Neill, Morales, and Katcher, Van Tharp, and others. Here's some of the websites I follow. I've gleaned my approach as what I thought were the best of the best. How I trade is probably different than you trade, but this is what I put together. My basic approach is simple. I want good companies with earnings for the most part, or growth in earnings. I want stocks in an uptrend. I like to buy them not when they're breaking out, although breakouts are fine if they got great earnings per share to support it. But my preference is to buy them when they pull back to support. And when they pull back to support, I'm looking for things that show me a change, like big volume, big price change, pocket pivots, Bible gap ups, kahunas. And you'll see how I use that. In HGSI land, that's been a pullback to free parking, which is the 50-day moving average, followed by perhaps a kahuna. With some of the stuff that George and I do, it might be a stock squeezing. Both pulling back to the 50 and squeezing might imply basing. And then mobile breakouts would be another way of looking at stocks that are having momentum and breaking out of a base pattern. So very similar approaches, different names, and different techniques. I have a lot of things on my desktop. I use daily TradeStation and Thinkorswim. I'm a big fan of HGSI for my analysis. Can't wait for it to be an intraday, not just end of day. EdgeRater is a great way of back testing, as well as they have some great market timing. The Magenta Trader is seasonal analysis, and then MarketSmith. I'm going to throw in that I'm going to go back and do some revisiting of VectorVest. They've upgraded their program. I do think VectorVest market timing, especially if they're willing to make calls, is important. And they've got a new options program came out, written by Tom Joseph, who did Advanced Get, that I should be having my hands on in the next week or so. Been using this slide for a while, and I should take it out, but you know what? It hasn't changed. And I think as much as the indices keep getting higher, big attendance at meetings, the hysteria around some biotechs, no major correction in 15 months, and employment's not great, are all reasons for a top. And then the more I look, the more I see people are still bullish on stocks, the comments of where else are you going to put your money, economy improving, interest rates low, easing of QE is not the same as raising rates. And clearly, as you'll see, this week took a lot of the froth out of the market, and the buckets don't show that we have to fall over. The Canaries are major players, as you can see here, Apple, Amazon, Google, Tesla, Facebook, LinkedIn, and Netflix, really right below new highs. And they're starting to squeeze at this place, which is a double top. So squeezing at resistance, could go one way or the other. If I look at the LLURs, oh, don't tell me I killed the LLURs. All right, well, the LLURs list would look similar to the Canaries. It's right off the top. And as you can see, despite a major haircut in new skin, which fell 50% over the last couple of days, the LLUR list, 20 winners, 8 losers, up 8.3% versus 4.5 on the S&P 500. For those who don't remember, we pick this list twice a year at Ian's meeting. They have to be leaders. LLUR stands for going from lower left to upper right in a chart, i.e. lower left to upper right. We want them to be tight. We don't want more than a couple in an industry. And we don't use them as a buy list, although like this time, every time they turn out to be good stocks to buy. What we do is use them as an early warning system, trying to predict when the market's going to roll over. So in this case, both the LLURs and the Canaries are our early warning system with the belief that they will roll over before the market falls. So that's why it's important and why I watch them on a daily basis. Again, the Ian meeting is a great meeting. I'll be there. I've been to every one for over a decade. Probably going to miss the October one because my wife is making me take her to, that sounds horrible, to Australia for our 30th anniversary. But can't say enough about this meeting. It's a great program. The software, highgrowthstock.com, free reports from Ron Brown, myself, Dave Steckler did a great webinar this week. Gil Morales has got one coming up. The software is free for 30 days, including data, and then it's, I think, $5.99 or something a year. I also have a blog there. It's under investing strategies here, and then you'll see my name. I also post these on YouTube. You probably already know that already, but my initials are JAS and then Cancer Doc to find them. Don't need to plug this anymore since we're about full. We do have one special guest who's Jan Arps from janarps.com, JANARPS. He is and his family, because 3 generations of technical analysis experts, and I use a number of their tools within TradeStation. Parting messages are always the same. This is your responsibility. No one's going to give you the money if you lose it. No one's going to pay you the money to make sure you win. You've got to do it yourself. Be your own guru. Investing is a business. Make sure you're the right employees. To me, those are my tools and my software. Continuing education matters, which is why I continue to go to PB meetings and trade the market we have, not the one you think we should have. So enough of that. Let me kill the PowerPoint. It's too early to make anything of, obviously, of the futures, but just for the sake of argument, I'll open up my browser, maybe, and I'll show you that when I last looked, the futures were up about a point, but this is all based on Friday action, and it doesn't look like my browser wants to come open, so I'm not going to worry about it. Next thing I like to do is I like to look, here it comes. You always hope and pray that you don't have anything embarrassing when your browser opens up as a site. I once had a very funny experience when I put somebody's USB stick in a computer, and I'm not going to say what we saw. So if we look at the pre-markets, you'll see that weren't doing anything, and they're still not doing anything. And this is as of 5:59, so on Friday. So nothing there to point anything out. Close that down. Very quickly, let's open up TradeStation. I want to make a couple of points here. First one is let's look at the elder indicators and the major market indices. When I go full screen, I get a lot of funny changes here. I'm not sure you see the blinking that I see, so that's why I made it a little bit smaller. The NASDAQ ran up to the upper envelope, pulled back the last couple of days. Blue. Let me shut this down. You don't need to see my trades. Blue, green. So the daily, the weekly are you make the call. The monthly is a buy. As we talked about last time, this high here took out the MACD divergence. We made a higher high, and I'm sorry to say that the MACD divergence is still here. It's back. That's bothersome, and that's one of the reasons why you might be concerned that we are nearing a top, although it's been a challenge the whole way up. The Dow Industrial sold off a little harder in the more close to the mid-range, but it's got, I think that's blue. It might be green. I'm a little color. I'd say green, blue, blue, or blue, blue, blue. Again, a scenario that, take your pick. It's not giving us a buy or a sell signal. And if I look at the S&P 500 here, again, pulling back into the center of the channel, all blue, MACD divergence is back in play. So whether or not that's going to be bothersome remains to be seen. It's certainly consistent. What I wanted to point out, and I don't care where you get them from, you're not going to see them here because I've got conflicts on a different machine right now as well. It is earnings time, folks, and you need to know what your earnings dates are. So I usually track it in TradeStation, but for whatever reason, it's not giving me the dates right now. But in addition to TradeStation, in HGSI, this is just a download of a HTML file from my buy watch. There is a field called earnings due, all right? And then you can sort by date. And this is important because we are in earnings season, and whether you want to hold going into earnings or not, that's your business. And I think a lot depends on how a stock has been behaving, what your costs are. You might want to buy puts as insurance. You might want to sell calls to pay for the puts. There's a lot of things that you might want to do, but ignorance is not a good answer. So whether you want to trade around it, do something with it, you just need to know your earnings dates. It's in HGSI. Usually it's on my TradeStation screen, but like I said, I've got it up and running on a different one, so there's probably a conflict. All right. For the sake of, well, I'll leave it on now because I might want to come back to it, but if I start having bandwidth issues, I'm going to kill it. The next thing I like to do is go back and look at what the market did last week. And why is this important? Because in a trending market, it may continue. I also need to make sure that I'm performing okay compared to my standards that I compare to, and get an idea of what's working and what's not working. I monitor a number of watch lists on a daily basis. In fact, sometimes I'm a little bit nuts. I know Ghilardi would say I'm a lot nuts, because I'll actually will take the top stocks in each of those watch lists and put them into a list of about 500 stocks, and then I spend my weekend looking at charts. So I want to always be outperforming the major indices. I want to always outperform, at least on an annual basis, things like the S&P 500. I want to do as well as the IBD 50 or HGS 100, and I want to look for clues for specific types of groups that are working. So the first thing is, as I said, this was not a great week. S&P was down 0.2. I believe the NASDAQ was up a teeny bit. Growth stocks did not do great. The HGS 100 was down 0.5%, and the IBD 50 was down 1.3%. This was a week that breakouts flopped, and that breakouts were down 1.5. That's from one of my scans. Red candle highs at a high jump, so stocks that were extended that sold off last Friday had a bad week, down 2.53%. Gap ups from my weekend, so gap ups from Friday were down 3 to 5% depending upon which scan I used. So stocks that were breaking out did not work. My stocks that were breaking out Friday, mobile breakouts from the squeeze, actually these were breakdowns, they did poorly. So stocks that should have done poorly did poorly. My breakdown scan was down 1.06% for the week. And then if I look at what was working, and this is where I kind of get interested, breakouts from the squeeze Sunday sort of did, like these are ones from last Friday, and it looks like they kind of did the same as the IB 100 and HGS 100 S&P 500 down a teeny. But there were some things that were positive. My stocks that I own, 50-50 up and down, but for the week they were up over 1%. My buy which last week, percentage-wise, wasn't great, but was up 1.82%. So that means 2% better than the majors. And then, if I look at my performance for those that continue to break out over the week, those stocks pulling back to a squeeze, then having a breakout with a PSAR turning positive, way outperformed. And then these are the other searches that I look at. Beating estimates is good. Good fundies was good for the week. High relative strength was good for the week. Sprinters, we like to talk about them, were up for the week much more than the markets themselves. The Hindenburg, we don't want to see these, and we haven't seen one for a while. You've got to have 2% on the new lows, and we're nowhere close to that. And you can see we actually got very high on the new highs at the end of the year in the Christmas rally, and now we're much more modest numbers. But no Hindenburg, that's a good sign. I mentioned the bucketology not telling me a lot as far as time to dump the market. Kind of 50-50 on stocks above and below the midline of the Bollinger Bands. In a bull market, you'll have 80% above. In a bear market, 80% below. When you start to get too high or too low, that probably means a reversal time. I look at the buckets. I look at what percentage of the S&P 1500 are below or above, and then at each 10% through the 100% distance of the Bollinger Bands. I see that very few stocks are above or below. I don't see anything here that would speak to extended. I look at the markets, looking at the Ian's bullseye indicator, where green is good, red is bad, yellow is intermediate. And we were green, and then we came off the green, but we've gone back yellow and green over the last week or so without any red, so that's positive. And that gives me personally a sense of what's working in the market, and that's why I look at that. Shut that one down. And let's go look at HGSI. All right. So the first thing I'd like to do is open up my warehouse view. And there you go. And what I'm going to go down to is Woodward & Brown Industry Groups, which I'm in. And I'm going to go up to 01, which is Major Markets Plus. And then I'm going to look at top-down. So I'm ranking the major markets. You can see I'm using the raw combo as my ranking piece. And I'm ranking my markets by the T1, which is giving me mostly looking at the last day, last 5 days, but also looks at the last 2 or 3 weeks because of a 13-day force. And it's given me predominantly technical indicators. So from a technical perspective, the leader over this period of time is the Dow, big stocks. Gold has made a huge comeback. Dollar is up, silver is up. And what's lagging continues to be volatility, small stocks, and big stocks. So stocks to the bottom, silver and gold to the top. That's a change. If I look at 5-day performance, volatility was up 2.5, oil was up 1.5. What was down was gasoline, transports, several of the stocks. Over 1 day, gasoline and gold were leaders, gold doing a little bit better than silver, and big stocks, small stocks, and volatility lagged. Okay? I like to look at very quickly at the major indices. So I like to start with the S&P 500. which I know is right in front of my face, but you'd be amazed how hard it is to see things in front of your face when you're recording something. I double click on the S&P 500. And this computer is not nearly as fast as the one I was using last week, which is too bad. Here it comes. And I have a lot of indicators on the chart. All right, so let me shut this down. I'm not going to spend a whole lot of time here, except almost looks to me like we're going to get a squeeze coming in the major indices. And if we start to see a squeeze, why would I say that? I see the 8 and the 17-day moving average and the midline of the Bollinger Band are lined up. I can see the Bollinger Bands are tightening. And so that's the type of things that I might look for during a squeezing market. So we're not necessarily squeezing yet, but we're heading towards a squeeze, and that could lead to volatility breakouts to the north or to the south. Continued a nice uptrend. In fact, if I add a little distance, add a little bit more rather, we can see ever since we had this bingo and a reversal with the morning star back in mid-November, we've had just a heck of a run of the stock market. So everything is green up here, lower left, upper right. Looks like it's basing here, or not necessarily basing, but pausing with that squeeze. Perhaps we're going to see something happen to the upside or downside in the next couple of days. The Dow, over the same period of time, a little bit looser with a couple pullback here to the 200-day moving average in October. Since the Dow has volume, you get the pocket pivots up in blue and down in magenta. But you could see also looks like it's setting up for a squeeze. Had a pocket pivot on Friday, which is bullish, which was based upon great volume on options expiration. I'm not sure if it means anything besides with options expiration. But since it finished up for the day, 0.25%, it painted a blue bar. So also looks like it might be setting up for a squeeze. The Russell 2000 as an indicator for small stocks. Looks a lot like the NASDAQ with the morning star down in mid-November. Big move up. The Bollinger Band starting to tighten. A number of indices coming together. Now the NASDAQ had a red candle high at the close on Friday, which is somewhat bothersome because that often is a reversal, or can be a reversal. Now, part of why I'm a little bit negative towards the market, if I go to my scanner, I think I've updated this, let me make sure. If I look at green candle lows over the weekend, there's only 22 green candle lows. So green candle low means the stock traded at the lowest level in the last 10 days, but it traded above the close, so it paints a green bar. So opened or traded lower, closed higher, and that could be the sign of a reversal. I had only 22 green candle lows, and you can see here we had a whole lot more red candle highs, 211 of them. So that's a little bit bothersome from a stock perspective. If I look at mobile breakouts on Friday, still had quite a few at 211. So if I look at mobile breakdowns, I had 330. So perhaps things that might tell me that we have a pullback coming. If I looked at extended stocks by the high jump, I had 169, which is a pretty big number. What else can we look at? We can look at the dollar. So the dollar actually had a nice week, got above the 50, could run all the way to the 200. I have a lot of conflict as to whether the dollar is going to go up or not go up. It certainly had a good week. Improving economy could be good for the dollar, as can concerns about worldwide collapse. Interest rates rising, probably in the U.S. compared to other countries, probably also good for the dollar. That kind of the message I was hearing from the EU was they were going to continue to ease to make sure they have growth. So dollar up could be difficult on certain stocks, although in a booming economy, perhaps a dollar up is good for everybody. If I look at the VIX, Every time it sneaks its little head up, it gets whacked down, and you'll see in a second, I hope, there we go, that the VIX is not as low as it gets. It's been down to this level, but it's pretty low, and there are a lot of folks that don't like to go long when the VIX is this low because ultimately the VIX is going to go back up, and a rising VIX is not great for stocks. A falling VIX is good for stocks, and this VIX is pretty low. It doesn't have much to fall. I take that one with a grain of salt because I made a lot of money when it stays down at the bottom. There's no question a rising VIX is not good for the stocks. I mentioned gold. Probably, I've been saying over and over that I'd be a believer when it closes above the 50, and even a bigger believer when the gold index closes above the 200. We closed above the 50, and I started nibbling for gold. We could still get knocked down, especially if quantitative easing continues. But every time we hear tapering, it's a shot of adrenaline for the gold market. Keep in mind that we've had big runs up before. This was in the summertime, and we came right back down. But this does look interesting, and Newmont, Goldcorp, and Barrick's all, I thought, the big guys had interesting looking charts. I mean, they look at those. You can see everything is green here. Interestingly, I didn't see a lot of silver stocks showing up on my review. Looks very similar. Doesn't look like a whole lot there that I could see. And let's just take a quick look at oil. Oil staged a bit of a recovery last week, but still way off of its highs. If oil makes a big move, that may have an impact on some of the transports and the airline stocks. Enough of that. Just curious. Let's go take a look at the industry groups. Last week we broke down the internals of the S&P 1500. So we see we have 145 industry groups in HGSI. I use the force index 2-day force, which looks at price and volume to separate the good from the bad. If the predominant move of the index is down for the week or for the last 2 or 3 days, then you have a negative multiplier. If it's up, a positive multiplier. You multiply the volume times the price change. Volume is in millions of shares. Price change is usually in a couple of dollars. So you should get the point that big stocks, big volume stocks usually lead the list and can skew things. And I'm trying to figure out a better way of doing that that will still tell me what's working right now, but perhaps will mitigate some of the volume. I'm thinking if there's a way to normalize volume and looking at increase over usual volume to calculate the force index from, rather than actual volume, because you'll see some of these stocks that come to the top are big guys. So 145. On the downside, we have increased the number, whoops, here it comes, to 42. That's a recent high. And on the upside, the numbers dropped down to only 24. So the leading group was drug retail. I kind of like Rite Aid here. It's got some earnings coming into the stock. Notice the 26 million shares helps to push this group up. And if I look at the chart, I see a lower left to an upper right. Let's make this a little small. I see a stock that's breaking above the Bollinger Band with a DI crossover, volume, and a kahuna. So uptrend, pull back to major support. Came off that support on Thursday with conviction with a kahuna and volume. I like it. I wish the Bongo Weekly had turned. Maybe it'll turn next week. This is one that made it to my buy list. That was the only stock in the group that made it up here. So then I go back to this, and I hit back, take me back to my list. Oh, I wish I had my faster computer still. Change to biotech. So, crazy week in biotech, as I'm sure you all experienced. Again, some of these have very big volume. Let's go through those that are above the index. There's 11 of them. That should tell you about biotech right now when 11 stocks are performing at this level. Sarepta, don't know anything about Sarepta, so I can't give you any fundamental story of why the stock is moving. Doesn't make any money. Everything is green, which I like. Did have a kahuna. I don't know how it had a kahuna. It must be on average volume. Had a kahuna up on Thursday, a harami on Friday, which made a kahuna. Good volume on both days. Pretty much green up above, doesn't make money. It came out of a volatility squeeze on Friday. See this, how tight the volatility was here? This was a very powerful breakout. I'm still bothered that it's below the 200-day moving average. I don't buy a lot under there. You can see the group strength right there for the biotech. Gilead, you know this is one of my favorites. A little bit of a volatility squeeze here, broke out above on Friday. Everything is green, multiple kahunas, pocket pivots. You know, someday it'll take a pause and pull back to support and give you a better time to buy, but still like Gilead. Intercept. You know, this is looking just like my Entremed chart, although I think this one's probably not coming down to zero like Entremed did. I did a fairly big commentary on the stock last week. And if we think about it, you have 5 trading days since I commented. 1, 2, 3, 4, 5. And what I commented on during my broadcast was to be careful that these have a tendency to come down. Well, it's come down. Maybe it's starting to form a new base, and maybe it's time to nibble, but it's still a little bit expensive for me. They came out with a very early study report in the news that drove some hysteria on a disease I hadn't even heard about, at least the name of the disease. Although once I read what the disease was, I just didn't know that name. But then I don't practice anymore, so it doesn't mean anything. Use this one at your own risk. Canaries had a big breakout this week, so a Bible gap up. Like a lot of stocks, closed off the high considerably on Friday. You could put your stop down here if it opens up above that doji or that hanging man or whatever that is, shooting star, and potentially get interested in the stock. Everything is green. I wouldn't let it get much below the bottom of the gap day. No earnings per share, so there must have been news. You could see the volume was huge. Pharmacyclics, in some ways, is actually surprising me. A lot of times these stocks get approved, the drug, and they sell off, and it pulled back hard. And we've talked about it a couple times as potential opportunities to buy it off the 200 here. Big move up when some new data came out and additional indications. It's off to the races. I've heard people talking $170. Great drug. My problem here is that J&J owns a lot of rights to this company. I don't think there's much of a takeout premium to be allotted here. And what I mean by that is a lot of these stocks will have buyouts after the drug gets approved, but since they've sold their rights to Rock and Roll and J&J, I think that might limit it. But it's a pretty exciting company, and what a great move off of 105 up to 140. Ariad started to move on Friday, but just like the one that gapped up and sold back, it actually sold into the day. So it traded up, I believe, on Friday. This is Ariad, isn't it? Yeah, it was up a teeny bit, 16 cents. It was up 75 cents at one time. So it's going to struggle, I guess, down here, but I bought some of this because I think the stock gets up to the 200-day moving average. Came up above the 50 with a couple of kahunas. That was my indicator of time to get in. If you weren't in already, you could have gotten in back here. I've talked about this on the blog. Good drug, good company. Surprised by the FDA, took it off the market. Bigger surprise, they put it back on a month and a half later. It's in the field, especially that I trained in, and there's a lot of excitement about it. So it'll be interesting to see. I've never seen a drug go off and on the market so fast. Identics Pharmaceuticals, breaking out here, cheap stock, doesn't make money. Beautiful pattern, 8 above the 17, above the 50, above the 200. Breaking out here, everything is green on a kahuna. That looks interesting. Biogenidec, I think my buddy Gil Morales called this boring biotech or something like that. This is like, to me, the best of the bunch. From a fundamental perspective, look at this earnings per share growth on a big company. It is a $70 billion company, trades at a multiple that's a premium. They have a lot of products out that are orphan status, which means great pricing power. They are a leader, they are a monster, and they are breaking out in the last 8 days out of a bit of a volatility squeeze. Seattle Genetics, great technology. They've got a single product on the market. I don't think this valuation here is related to their single product on the market. I think that valuation has got a premium that they could be taken out. You could see on a weekly chart the stock has come from $12 up to $48, getting back to test all-time highs from September of this year. What they've done is they've licensed products to a lot of different companies in the marketplace. Looks a little extended at this point. It's going to have to fight through a double top here. But certainly has been a leader. You want to buy this one closer to support if you get that chance. And look, you got the support here and a bunch of kahunas to give you an idea. Vertex, another company this company is in both the hepatitis world as well as the cystic fibrosis world. It had some rough times here. Doesn't make any money yet. They do market products. A lot of people like this one, not one of my favorites. Regeneron might be a lot like Pharmacyclics, and they've got a great pipeline, a lot of eye-related drugs. They have great revenue, have had great earnings, although they look like they're going to slow down. They've got both a great R&D and pipeline story, as well as a story about marketed drugs. Sanofi has a big portion in them, would be the likely takeout partner, and again, that probably hurts a little bit of the takeout premium that you might expect to see on these smaller stocks with good products. You know what, someone's going to ask me about this New Link Genetics, so I'm going to put it up there. I've got friends that like to buy cheap stocks, and this one's not cheap anymore, but it was cheap not too long ago. I'm going to shut Trade Station because I know it's hogging my memory. All right, so New Link was a very cheap stock, under 20 bucks, broke above the 50 here. Is this a cup and a handle in the upper part? Another handle and running, who knows. A couple of kahunas, big volume coming to stock, everything is green. There's a company called Foundation Medicine that's also a genetics company. You have Myriad take a hit in the Supreme Court. So you got companies that are creating products, you have companies that are testing, genetic companies are hot right now, don't know anything about this. Looks like it wants to take off, but it's gone pretty far and it's right at the top of a high jump. Up. Aluminum index, these have been on fire. Let's just take a look at Alcoa. Several of these came up on my review. I don't get it. I mean, I guess they got earnings per share, but you can see Alcoa breaking out here, big volume on Friday, kahuna on Thursday. Everything is green. Big dollar revenue, not a lot of earnings. Maybe there's some expectation on earnings growth coming in. I think I've heard some discussion about market expansion with the economy improving. Copper is another way of playing that. Fourth group is gold. And I mentioned these three, and I put them on my list as bottom fishing for nuggets. So let's just take a look. American Barracks, why I liked it is there's nothing to the left up here. This thing has been killed for so long that, you know, the overhead supply is far to the left. It's got no moving averages above it for resistance. It had a pocket pivot on Friday. Everything is green, and I've started buying some of this because if gold is coming back, this might be one to look at. Goldcorp, similar pattern, except it's below the 200-day moving average. Did have a kahuna in volume on Friday. Newmont, again, similar pattern, but below the 200. Didn't see a whole lot of other ones on my list. Curious what CDE has both gold and silver. Pocket pivots. I mean, something definitely happened here. Kudos to those that were calling it out on the HGSI board over the last couple of weeks. I was a laggard because I wanted to get above the 50. Also, thank you so much for those of you on the board that are now actually talking about stocks when you're buying them, why you're looking at them, why they look good, because it's great to show off when you have something that's gone up 300%. It's even better to show us why you bought it when you bought it. Casinos and gaming have continued to do well. We'll look at Century as one if you want to do some nibbling on a small guy. These stocks have been on fire, mostly because of Macau. Win, lower left, upper right, tight, extended, enough said, pocket pivot on Friday, everything is green. Love the chart, don't love the earnings. MGM is another one that kind of looks like the same chart except it's $26. These stocks have been a wolf pack for some time. One of them I own Las Vegas Sands. You can see here, lower left, upper right, good earnings per share growth. I also own the Meckel Crown, MPEL. Probably getting pricey because I looked at some outside earnings. Everything is green, big Macau presence, red candle high at a high jump, gapped up on Friday. A lot of these stocks are probably asking for a pullback. If you don't have any gaming stocks, you want to nibble, I like Century Casinos. Don't know anything about them. I like the pattern. It's a cheap stock. 3 kahunas in the last 5 days, a DI crossover, pretty much turning green. The weekly will go green soon. This is a short weekly above my daily. Breaking above the 50. It's probably not nearly as good as a company as the others that I showed you, but looking at a low-risk stock at a good buy point, you put your stop not much below that 50-day moving average. You risk 50, 60 cents, and you see if you can get a move out of this guy. If they continue to move, it's going to pull that one with it. Back. Obviously, Las Vegas and MPEL would be probably better investment vehicles. Investment bankings and brokerage houses, boy, I got lucky. I bought Morgan Stanley a couple days before earnings only because somebody else's earnings were good, and I got rewarded. Sometimes you get punished. As I go back pretty far with these indicators, and I don't limit them, which I ought to be, to 1 year on this machine. That's what's taken so long. But you could see pull back to the 50 on Monday. Tuesday gapped up with a kahuna. A little bit of a pullback on Wednesday. You can't see much there. And off to the races on Thursday with the Bible gap up. Everything's green. A kahuna, big volume. I think this was intriguing. I think it's more of a turnaround on the industry than it is just the individual earnings on this company. Don't know anything about gain capital, but again, if you're looking for a cheap stock, here's look at it on weekly. I'm not advocating cheap stocks. I'm showing you an interesting pattern. Been in an uptrend since April, got up to about 50% haircut, down to the 50 weekly. Now let's go back to the daily. So it's down to that 200. Just got above the 50. If I wanted to buy this stock, it's at a place where I might consider it. It makes money. Not a very big company, and I'd probably do some research before I would just go out and buy it because Jeff liked the chart pattern. Next group, life science. Can we say Illumina? Illumina, this group has been moving. Illumina is a great looking chart. I don't get it. I don't get it. I don't get it. I don't get it. Market cap's 18 billion, 17 billion. It's gone up from 78 to 140 since summertime. Had a Bible gap up on Friday. It's like forming a spinning top here. It'll be interesting to see where it opens on Monday. Earnings per share growth, not great going forward. Lots of potential acquisition interest from Roche. They are a leader in the industry. They just look kind of expensive. Don't know anything about Pacific Biosciences. Big day on Friday, sort of a cup handle breakout on volume. Everything is green. Doesn't make money yet. Here's your Wuxi. I thought this was a Chinese, not a Cayman-based. China-based pharmaceutical and biotech company. in a big move going sideways, had a kahuna in about, so it's setting up for a volatility breakout. You can see the bands are coming together. Big kahuna in volume on Friday, a break above this, it might be an interesting story. So this is top-down investing at its finest, as I go through the top 10 groups on a weekly basis. And we'll look at a couple more groups, and then we'll look at what's going to the downside, and then we'll do a little bit of bottoms up. Regional banks, I have a position in Key. A lot of these look good this week. I'm not going to look at much of them. They all got the same chart. Let's look at Regions Financial. Rounded bottom, broke above the 200 back in December. Sideways, moved up again, basing again. Is it time to run? Everything is green, not on the base of earnings per share growth. Pays a little bit of a dividend. I think this is the regional banks, as I understand it, are a potential play on the rising dollar as well as rising interest rates. Home entertainment software, gosh, Electronic Arts had a great week, up 12%. I thought their Christmas sales were bad. Perhaps it's related to the new Xbox and the new PlayStation. Can't even find a PS4 if you want one. So the stock had pulled back, so here you had a volatility squeeze. You got the 200, the 50, 17, 8, all within the same range. Broke out on Friday with a pocket pivot, kahuna, lots of volume, BI crossover, Bible gap up. It's a pretty picture. Good earnings coming into the chart next quarter. I don't know. I've been burned by this stock in the past. Take-Two Interactive. Also, these must reflect the Christmas earnings. And sitting on top, the 200-day moving average gone sideways with a kahuna on Friday. Maybe these guys are ready to rock and roll. Don't know enough about them to make much comments. And then diversified metals and mining. If the world economy is increasing, plus the gold and silver that many of these have, BHP Billiton, got to get above the 50, failed there, so that's a nice little failure, not that exciting. Rio Tinto, a big iron ore play. They're trying to break out here. Very gappy because of ADRs. Techminco is a Canadian iron ore and some coal play. Still in a downtrend. Anything else that I liked across here? Notice oil, gas, and equipment up on 12. Schlumberger, we'll probably look at later, looks good. Coals made the list. Wasn't real impressed with them on my review. A couple of refiners. Is it time for refiners? I don't know. Might want to look at that. Construction and farm machinery. What wasn't working? Well, semiconductors, big banks, internet software, communication equipment, home builders were down, asset managers, automobile manufacturers were down on the week. Building materials, although I did see an interesting building material stock or two, and I also saw some interesting auto parts. So that's my top-down approach. What do I do for bottoms up? You may have noticed in the beginning of my review, I showed you that my sprinters for the week did pretty well. So I always like to see what's in the sprinters. So we go up into HGSI strategies, Woodward and Brown, archive, reference library. There are easier ways to do this. You can draw them down and put them into favorites, sprinter, but since you don't have my favorites. So these are the stocks that made it into sprinters. What do I notice over here? Life science, well, first of all, healthcare. Healthcare is on fire. Why is healthcare on fire? These are fundamentally and technical strong stocks. Healthcare is on fire because of Obamacare. You don't have to like it, you don't have to love it, maybe you don't even have to use it. But if you take 10, 20, 30, 40, 50 million people that don't have insurance and you throw them into the marketplace with insurance, what are they going to do? They are going to buy First of all, they're going to go see their doctors. So public physician companies, although there's a lot of pros and cons, and public hospitals will probably see more volume. Volume is good unless the government reduces what they pay. They're going to buy drugs. So pharmaceutical companies, whether they are the Valiants of the world, which we talk about all the time, the activists, which is the generics, or the biotechs like Biogen, Alexion, Jazz, they're going to be buying more drugs. Where are they going to buy those drugs at? They're going to buy them at Rite Aid, or CVS, or Walgreens. So, and I'm going to be ordering as a physician more and more tests, taking advantage of some of the new innovation that I get from companies like Illumina. So it doesn't surprise me at all, Pacific Biosciences, the stocks and the sprinters are heavily related to healthcare. Maybe Gilardi and I can do a webinar about ACA winners, because I think there's going to be a lot of them. So Illumina we've looked at. Let's just, at the risk of taking forever, let's look at the top 20 and see anything here. So Illumina we've already looked at, extended, but a great stock company. Auxilium is a smaller pharma company. It's got drugs on the market now, a little bit of money coming in. I like this pattern. What I liked about this stock was it's got some good earnings coming. I call this a breakout EPS all-star. It's going to, let me clear it off my mess. It's going to have to get above here, maybe for some people. So it's been in a deep pullback, breaking above, and it does have earnings coming into the stock. Everything is green, broke out on Friday with volume, something to look at perhaps. Valiant is one of my favorites. This is a pharma company that grows by acquisition. Hasn't really looked back in quite some time, certainly is at a extended buy point right now. Activists pulled back a little bit, maybe give you a chance to buy it at a little bit bigger discount. This is the leader, in my mind, in the generics after a lot of acquisitions. Thermo Scientific Fisher, at distribution. You're going to have to get those drugs and medical supplies and the tools necessary into the hands of the people that do them. Big bull run. A lot of these things you can see are very extended. Gas log. This is one I find interesting. Yield 2.5%, multiple is high at 50, and these are tankers, if I remember correctly, water transportation for liquid nitrogen gas, natural gas rather, or nitrogen gas, LNG. This was a great buy point here when it pulled back towards the 50. Two kahunas last week, big volume. I don't think it's too extended to buy, although the high jump is starting to get long. I got excited by this. I got excited by the earnings. So it is extended. I like this stock. I'd love to see it pull back. But if the market trades up, it's got a dividend play, it's got growth, it's got earnings, I find gas log to be interesting. I think we looked at it earlier. Biogen IDAC, we certainly saw it earlier today, one of the leader big daddy pharmas. MGM Resorts, a big resort. Alexion, one of these biotech pharma, I guess it's under biotech. More about, certainly has had a nice run here. It did have a pocket pivot down on Friday, which is sort of strange. It had it on volume, and it closed right near the close of the prior day, so I'm going to ignore that. This has been a big leader that may not look that exciting. Just look at this on a weekly or look at a monthly chart. Right? And I think I know something. My cousin was their medical director down here. We did a lot of meetings with them from a business perspective, and I didn't buy the stock when I should have. I could have bought the stock when it was $20 a share. Oh well, I guess I'm not supposed to buy from companies I do business with anyway, so I don't feel that bad. Jazz, talk about this on my calls all the time. Great earnings per share growth, moved to Ireland, which cuts their tax base. Everything's green, big run up. It's extended. Notice that extended word's a lot. Here's Rite Aid. We already looked at this one, breaking out from a squeeze. And SMI, don't know anything about this company, cheap stock. kind of gappy, big breakouts, don't know anything. So where do we get down here? So we got through, all right, we'll stay on the top 20 as I promised. I think we're doing okay for time. We are. Royal Education, education stocks, especially Chinese ones broke out. TAL's another one, although I think it's XRT or XRS is the letters. Pocket pivots on Friday, everything is green, makes money, turnaround play, I guess. Here's that Regeneron, which I talked about, in pharma biotech land. I guess it's a biotech. Pulled back eye drugs. Looked at Las Vegas Sands as a top-ranking casino stock. Align Technology. This one's kind of interesting. They had a pretty strong pullback when one of the companies that had a lot, they had bought something from, had a lot of shares and sold them. Seems like it wants to run again. Medical devices, it's running, another potential winner from Obamacare. Lockheed Martin, a lot of the defense stocks look good. Several of them are expensive, and they don't have great earnings per share growth. They must be expecting a lot of spending coming in on defense. Here's MPEL, that other casino stock I like. Here's a small biotech. I don't really love the company, but they're making a big move here. They bought some products that look like they might have some opportunity of going up. Starting to get extended for a stock that loses money. Their approval is in Europe. They've yet to get an approval in the U.S. I think they found potentially a European partner. Number 19 will be Bally, another casino stock, a little flatter than the others. And 20, don't know this guy at all, didn't look at this, Biospecific Technologies. Rounded bottom, breaking out the kahuna, everything is green, doesn't make any money. I'd probably figure out what they do. So the point of this little exercise was a couple. That was number 21. Over half the stocks on Sprinters we showed on our top-down review. Sprinters is another way, if you don't have hours at night to look at charts and do what I do, to figure out what's working in the market right now. If all you looked at were those top 20, you would have identified some major leaders. You could have clicked on industry and seen that biotech, defense, casinos, healthcare equipment and supplies, pharmaceuticals, you can see where the strengths are. So there's a lot of things that you could have done for a short period of time. Jeff, I don't even want to do that much work, I hear. Okay, so open up Designer. Go back up to the top, shut this puppy down. And let's go into Tools, Group Inclusion Report. And we're going to call this, always go AAA, so we're going to go this BBB, Web Gem, and today is 119. And we only want to look at the top 10. This is a Jeffrey Go Crazy time. This is a little quicker. And I want to look in here, so I'm going to go to Clear. I'm going to go into Woodward and Brown, and I'm going to go through all my favorite groups. Whoops. I'm going to go through 52-week high, retrace, new highs, best criteria, best of less than 15, demand, ERG, growth, HGS leaders, QEPs, stocks and groups moving to the upside, EPS, and turnaround. So the hypothesis here is these are pre-computed lists on daily of the best stocks in the market. Some people just like to buy Woodward and Brown and under 15. My hypothesis is that any stock that shows up on many of these lists must be a really good stock. So we use this group inclusion report to tell us which stocks show up on a lot of lists. And what are we going to find out? Here are the stocks that made it to the majority of the lists. Alexion, Synaptics, NPEL, Ligand, Jazz, Questcor, Regeneron, Las Vegas Sands, Auxilium. What do you notice there, folks? Lots and lots of healthcare. All right. So we're going to look at those real quick. I'm going to go into my user group and find my BBB web gems. Here they are. Let's just open them up and look at them and see if we learn anything new. So again, how long did it take to do that? About a minute. Now I've got 10 stocks to look at, which are the best of the best, and I can see if there's anything that's at a buy point. Alexion, as I said, pocket pivot downside, but probably related to just a small closed day on decent volume. In an uptrend, Auxilium, I like this a lot. I mentioned earlier that it's got a lot of earnings coming in. I think it's a breakout earnings all-star. In Bensense, sort of a cup and a handle, potentially breaking out here. It's had a big move up. Jazz, one of my favorites. We already talked about it. Las Vegas Sands, one of my favorites. Already talked about it. Ligand, I talk about all the time, and I like to buy this thing on support. So we talked about it here. This is a drug company that sold off all its marketing rights, has got royalties on a number of drugs, including Kyprolis, which is the drug that Amgen bought Onyx for $100 plus a share. Everything's green here. It doesn't yet pay a dividend, but it's got huge earnings coming in related to some of its royalties. I like this. I love the idea where it makes money and has little expenses. Melco, my Macau small casino operator. I think I mentioned this last week. This is a dangerous stock, and it was at a great buy point with the reversal day right on the 200-day moving average. On Thursday, they announced some strategic plans to figure out why their stock trades at such a discount to the marketplace. It has growth rates of 60, 70% quarter over quarter. They always outraise and beat. It trades at a multiple of 13, pays a small dividend. Had a big move Thursday on that, gave back some on Friday. This is the world, to me, it's one of the toughest stocks to trade because it blows up constantly. It's a big run up, blows up, run up, blows up, run up, blows up, run up, blows up. And it usually blows up because of a short sell or a short side analyst comes out with a negative report. Regeneron, again, this is the guy that's got partnership with Sanofi, great eye drugs, great company. Basing would look for a buy signal. Synaptics, everyone in my notebooks has a Synaptics tracking thing, so that must be good. I was unimpressed with their earnings per share growth going forward, but you can see how the success of their products in the market made a big difference. We've got a good chance to buy off here. Started to get more extended, but everything's green with a pocket pivot. As you can see, like many stocks that ran up on Friday, in my portfolio and probably yours, what looked like a very good day closed below normal, below a win. So that makes me a little nervous for this coming week. And that's that. You put up my buy list and see if there's anything that I thought was worth talking to you about. You know, you can always stop it here. Actually, let's look at a warehouse. And you can stop it and write down if you so care to. So these are all, that's not my buy list. So now Scott, 119, buy watch. And let's go to my view that has all the stocks in it. All right, so I found a lot of stocks that look viable, and a lot of these are stocks we've already looked at. Many of these are stocks we've already looked at. If I look at where were they from, biotech, casinos, pharma, investment banking and brokerages, oil equipment services. Some of my favorites that we have not yet seen in my review. Well, another thing we point out here, earnings dates. So I take all the ones I want to buy, frankly all the ones I own, I do the same thing. And I could see on a daily basis where earnings are coming in. So we already went through these. So we have some of the education stocks starting on Wednesday, or Tuesday rather. Schlumberger, hopefully this portends a good outcome for Halliburton, which is the one that I have a position in. Earnings came out on Friday, sort of a cup handle. Growth breakout above the 50 with a pocket pivot. DI crossover. Earnings coming into the stock. Pays a small dividend. This might be a place to play. Here's another oil service stock. cup handle or just a big bottoming kahuna, pocket pivot, breakout on Friday, everything turns green, earnings coming into the stock. There were a lot of automobile parts companies that I liked. This is one of them. I'll show you what I liked about them. So gradual move up, rounded bottom, so the cup. Green here on the daily, earnings coming in, trades at a multiple half what the earnings rate is. Tenneco, others that I saw in this industry were Tower, which I've liked for weeks. And the other auto parts company here was Gentherm, was actually Magna and Gentherm. Here's Magna, similar pattern, bunch of pocket pivots, everything is green, earnings coming into the stock. So I kind of liked several of those. Here's another one that I liked, ACIW. This is one of my favorite patterns, and it's a stock that's had a big run up, goes into a base. I got a volatility squeeze setting up here. Earnings per share at large coming into the stock. Group index up. So to me, I don't buy this until it breaks out, but I might put a buy stop on this one and see what I can get with this. ACI worldwide. The other thing that I do, and then I'll say goodbye because we're a little bit over an hour, is how do I track these? I put them in TradeStation, but I also have different groups. I have groups that I call breakout earnings all-stars. All these stocks have great earnings coming in. Green Plain Renewable Energy is one. Glad we looked at. Towers, that automobile manufacturer. Although it's expensive, VIPs might support a valuation of $200. I have leaders that are extended. Okay, I have Valiant. We showed you how that one had run up. SanDisk, Activist, Las Vegas. Salix is one where the earnings stubbed its toes this year with an acquisition, perhaps. They got a lot of earnings coming in. Gilead remains, I think, my favorite biotech. Trinity, Greenbrier are train manufacturers. They both look good. Blackstone Asset Manager in a big move. The Bible gap-ups, Carrick's and Maxwell. I didn't look at Maxwell, so let's very quickly just look at Maxwell. I like the chart on Maxwell. Now, I'm not telling you where to buy them or where to sell them. I'm just pointing out stocks with interesting looking charts or perhaps group rank, etc. So I forgot what this was. Was it MXWL? I guess not. So Maxwell was MXWL. There it is. So what do I like about this? I liked pullback, rounded bottom, breakout with 4 kahunas in a row with increasing volume with a Bible gap up on Friday, close above the midline of the day. I set my stop here. I maybe give it a little bit of porosity. I probably put a buy stop that it trades up on the day. I might even put my buy stop that it takes out the high. But I think this is a stock that's a beautiful looking pattern with the multiple kahunas, the DI crossover, the Bible gap up and everything turning green. Of course, I've got to look at it on a weekly to see how bad it's been hammered. And it sold off 10 months ago. But a move back, so I've got this thing above my head, but that's 3.9, that's 30% away from where we are right now, and that would be the 1,000-day moving average. So that's one I'm going to look at. Pullbacks ready to run. We looked at several of these. You know I like pullbacks. Pullbacks waiting on a signal. These would be stocks that have pulled back, but I'm going to wait and see a reason to get in them and look for volume like that ACI we looked at, kahunas, etc. And then I talked about bottom fishing and those 3 gold stocks. Probably time to start putting 1 or 2 in there. You maybe take junior positions and add to them when we get above the 200-day. So on that note, I want to thank everybody for participating. I want to thank everybody again for signing up for my meeting. I want to ask you to consider, even if you're coming to my meeting, certainly if you're not, to go to the upcoming HGSI meeting. They're always great meetings and something that you shouldn't miss. And y'all have a great Martin Luther King Day. And enjoy your day off and your short trading week. We'll see you next week. Bye, everybody. Thank you.